There is an upcoming US election, potentially huge repercussion on the crypto industry. What is your view on that?
They want fair regulation. They want the industry to be able to be built in the United States. And that's a very positive development. I have a very strong conviction that that will be the primary way that digital money works in the future. I do think that central banks should continually upgrade their core systems and their core technology.
Many say that this is a pivotal moment because now Bitcoin is more accessible and is a regulated asset for more traditional investor. Jeremy, according to you, was this really a game changer for the industry? Is it still a game changer? And what's your opinion on this big news?
Yes, it is. And I think on many levels.
Dear friends, welcome back to Crypto Backstage. I am really excited to have Jeremy Allaire with us today. Jeremy, we've known each other for some time now, and it's amazing to finally record this episode together. Today, I'm also joined by my dear friend, Gary Benezat, founder of Crypto Coulisses, who will co-host this special interview. How are you today, Jeremy?
I'm very well. Thank you. Thank you both for having this conversation. It's really a pleasure.
Likewise, and everybody knows you, but I will still mention that you are the CEO and co-founder of Circle, which is currently the second largest stablecoin issuer by market cap. And Circle is on a mission to build a new internet financial system based on open protocols. We have lots of burning questions we can't wait to ask you. But before we jump in, if you were to highlight 3 key milestones in Circle journey, what would they be, Jeremy?
3 big milestones in our journey. Yeah, it's a really good question. I think the first big milestone goes quite a ways back, which was when we founded the company. We had this idea that we could create a kind of payment system built on public blockchains, that we could connect fiat money to those public blockchains. And we knew that to do that, we needed to, we needed to do that in a way which was legal, basically, right? And so we chose the hard path of becoming a regulated company. And so really, we built a lot of infrastructure in our first several years, and we built licensure, becoming the first crypto company to be licensed throughout the United States, the first bit license, which was one of the very first crypto licensing regimes in the world. We were the first crypto company to be an EMI license back in 2016, early days. And doing that, and the importance of that is that it unlocked our ability to work with, world-class, with banks, with auditing firms, with others. Like we just taking that kind of serious approach was very important. And so that's one big kind of collection of things that were early on. I think the second is by far, the successful launch of USDC. I think when you start a company, you have a vision, you have a long-term vision. I'm a technologist by background, and there were things that I saw that would become possible, but were not possible when we founded the company in 2013. But I knew they would be. And so to finally see those come, and then to be able to build and to kind of invent and create in this category was just a huge milestone. And especially in like 2019, when our market was really depressed. Actually, it was a very challenging market, but we were actually so excited because we were seeing product market fit on a protocol like USDC with the emerging collection of companies known as DeFi. And it was very clear, like, programmable money was here. On-chain programmable money could be used in powerful ways. And we had kind of created something that people really, really valued and wanted to work from. And that allowed us to basically, as we say, double down and basically put all of the company's energy and resources behind scaling that. And then maybe I think the third milestone is actually one that's probably close to home for you, which is this milestone of becoming the first global stablecoin issuer to receive a MiCA approval. And I gave a talk in Paris when that happened, and in my talk I said that I believed that this was that day, July 1st, 2024, would be looked back on as a turning point, not just specifically because of what Circle was doing, but it feels like when this form of money becomes actual legal electronic money at a supranational level, it's a very big deal. And kind of the combining force of technology progress, it really felt like this was a transition point. of going from the early adopter phase of this technology into a mainstream phase of this technology. So that was a really powerful moment for me, and I think in the history of the company as well.
Yeah. And I think it's very interesting because I've heard you say, regulation isn't the primary driver. Like building a technology is the driver, but you still had, regulation and compliance in mind all dating back from your first day,
Yeah,
which led to then being the first to be MiCA approved. Yeah,
yeah, yeah.
very
These are
interesting.
long-term investments. Yeah, yeah,
Indeed, that are going to pay off in the long term.
yeah.
Um, Talking about the governance aspects, there is an upcoming US election in November, and it is said to have potentially huge repercussion on the crypto industry. What is your view on that? Do you estimate that it will be mostly neutral, positive, or negative for the blockchain, open protocol, crypto industry in general?
Yeah. So I'm fairly close to this topic. I think on the positive side, prior to this sort of election season, um, there was really strong progress being made in the U.S. government, in the U.S. Congress, towards establishing what I believe are two sets of regulations and policies that would provide the clarity that's needed for the industry to be able to grow and operate. And so that was happening, and you were seeing the bipartisanship there. And it was a lot of many years of education, and also I think a belief that the time has come to do this. And so that was a positive thing, and you saw some momentum with various bills in Congress happening. I think the second part is that it's a big industry now, and there are many very significant leading companies in the United States that have built companies in the United States, including Circle and certainly Coinbase and many others. And it's an industry that really is showing up in a major way as a political force, and both a grassroots political force and a coordinated, organized political force. And the result is that both presidential candidates and their staff are taking this quite seriously, and I think have made, I think, clear signals, some more explicit than others, that they want fair regulation. They want the industry to be able to be built in the United States, and that's a very positive development. And so I think no matter who becomes the president of the United States, I think you have a Congress that is ready to act, and I think you'll have, in either case, an administration that's ready to sign bills into law. Now, the nature of those may be different under one government or another, but I think there's so much, I think, agreement on the fundamental principles that I think that we'll see that happen. So I think I'm very pleased with where we've come. Right, when I started this 11 years ago, the concept that this was going to be a presidential political issue, an international, a core issue for people who govern the international monetary system. I actually thought those things could happen and would happen, but to be in it right now is pretty amazing.
Yeah, making history in a way.
Yeah.
So if I rephrase, you're convinced that it's not only opportunistic or electoralist, but it's way beyond that, and more advancement will be made
Yeah.
post-election, no matter the government.
Absolutely, absolutely. I do see that. Yeah.
That is huge.
Um, I would like to talk about central banks. Do you believe central banks and governments see stablecoins as a threat or competition?
It's interesting. I think the understanding of stablecoins within the central banking world has evolved quite a lot. I think at first, the stablecoins, in the version of something, say, like Libra, were viewed as very much a threat. Now, I think there's been years of kind of industry development, technology development, and maturation, and I think now most central banks have come to the view that this is a new form of electronic money that is an important payment system innovation and needs to be integrated into the global financial system. That's a very different position. And I think also in most parts of the world, the priority is actually establishing, clear regulations on stablecoins as the sort of first priority versus something like a central bank digital currency, which is a sort of very future thing. It's uncertain whether the population will support it. It's maybe a 5-year or longer kind of undertaking. But stablecoins are here and now, and banks and non-banks and other digital players are innovating, and so central banks have now come around and said, okay, this is here. We need to have rules, and even are starting to understand that this innovation actually is potentially a transformative innovation in the way the monetary system works by introducing full reserve forms of money that can circulate and be used, that carries in theory carries less risk than privately issued commercial bank money. And so it's even leading to let's call it, like, the economists are now starting to think about this a little bit differently, and that's a really positive evolution. I think the area where central banks still have, as we say, the most heartburn is they're really used to kind of operational resilience, settlement finality, and kind of infrastructure control as critical pieces of kind of authorized payment systems. And the concept of both electronic money and the actual infrastructure that provides for the settlement of that electronic money being something that's an open source, open protocol, public internet infrastructure, they're having a very hard time with that. And are in some jurisdictions, they're allowing banks to interact with public chains. In other jurisdictions, they're restricting it. And I view this as similar to how, for a very long time, companies and governments were afraid to kind of connect to the internet, and then they were afraid to use the internet for communications because it might be insecure, and then they were afraid to put software in the cloud or use a cloud service provider. And gradually, we've been able to move onto public internet infrastructure for things, and it's required stronger and stronger forms of security and operational capabilities. And so, in many respects, public blockchains are still a nascent technology. And they have not proven themselves at a huge scale, and so there's still development work to do to eventually get central banks comfortable with kind of public networks being part of the actual retail monetary system.
And you, as a stablecoin issuer, do you see central bank digital currencies, or CBDCs, as a competitor or future competitor?
We really don't. I think we're very focused on the here and the now, and solving problems in the market today. And the particular innovation that we're focused on is open, public, permissionless networks, the ability for developers to freely build on that infrastructure and innovate on that infrastructure. And that's a very different focus. And I think that model of open, composable, programmable money is going to be very successful. And I think the technology development of kind of open source innovation in the blockchain infrastructure is also a very, very powerful force. And so I have a very strong conviction that will be the primary way that digital money works in the future. And I do think that central banks should continually upgrade their core systems and their core technology. And so at a kind of wholesale level, the core systems of government central banks need to be continually improved. And it's a very positive thing if the choices that they make about the architecture of the central bank itself moves more towards crypto, moves more towards the use of distributed ledgers, sort of consensus mechanisms that allow for the people who do connect to the central bank to use those innovations. And so it does seem like a technology that will eventually find its way into the core of central banks. But I think the innovation of the actual delivery of the infrastructure that the real economy is using day in and day out will very likely be private sector intermediated in most parts of the world.
Okay. So probably like in France in the coming years, or in Europe or in the US, we have a few chance to trade as individuals, CBDCs.
Yeah, I haven't seen any evidence of like a digital euro that would be freely usable on the public internet and programmable and be something that could be integrated on public blockchains. I haven't seen any evidence of that.
Okay.
Okay, so I'm going to bring us back to the beginning of this year. We're in January. BlackRock, which is the world's largest asset manager, launches its first spot Bitcoin ETF. They played, a very big role in making this approved by the SEC, and really helping with concerns about the legitimacy and security of a Bitcoin ETF. Many say that this is a pivotal moment because now Bitcoin is more accessible and is a regulated asset for more traditional investor. And we all know that in this industry, bridging the traditional finance world with the decentralized finance is really important and is a key to mainstream adoption. Jeremy, according to you, was this really a game changer for the industry? Is it still a game changer? And what's your opinion on this big news?
Yeah, I mean, I think yes, it is, and I think on many levels. So the first is you actually have like a fairly robust regulated market structure with regulated custodians, exchanges, kind of a way for the traditional electronic markets to access this, and then the ability to provide this into the distribution platforms of basically any investment management product in the United States. So I think it's very significant kind of market evolution. It also obviously is significant in that I think it shows that even the SEC is willing to see kind of quality infrastructures be available to the general public. I think what it's done, of course, is it's not just BlackRock, it's Fidelity, and it's so many other major names, and now it's like Goldman Sachs and Morgan Stanley, and so many companies now have a way to get into this market, and so we are seeing, I think, at the institutional level with like major financial institutions, major payments companies, major technology companies, we're seeing new levels of interest in the whole technology area and the broader capabilities here. And so it's part of a cycle, I think, of generating credibility, awareness, engagement, and that's taking place. And so I think this year has been a strong year for that increased interest. And also, and maybe we'll talk about this, but things like MiCA have been a really important milestone similarly, because I have seen, and with our team in Europe, we have seen, a real increase in interest from a lot of traditional institutions who are now like, okay, we can now use this. Like, there's now a framework for us to know how to apply and use this technology. That was not the case. I think we've seen a sharp increase in kind of major institutions interested in stablecoins and in tokenization and in blockchain applications.
Yeah, I think this is a great point, and it's really important to shift the narrative. We sometimes hear that MiCA, has still some blank spots where you don't exactly know, and it may create delays or may create confusion, maybe if you're operating outside of the EU. But the other side of the coin is that it actually defined very precisely on a number of critical topics, which then attracts the traditional institutional players into this technology and its capabilities.
Totally agree. Yeah.
So if we take a more crypto native point of view, there's been a massive influx of liquidity thanks to the Ethereum and Bitcoin ETFs. Do you think, therefore, as this industry goes more mainstream and has more liquidity, we'll see a less cyclical aspect of the crypto ecosystem, and it will be less dependent on the Bitcoin halving, for example?
Yeah, it's an interesting question. I think back to other technology market cycles, right? I've been working in internet technology for 30 years, and I've sort of seen these different cycles that have gone. And at a certain point, you get to a place where um, the technology maturity is at a point where people in a more mainstream scale way can start to deploy things and use things, and you continue to see continuous improvement in the technology, and then it's kind of irreversible, and in a sense, like it smooths out, right? If you go back
Yeah.
to I think really 2004, that was a point in time when the internet had worked through multiple, you know, ups and downs. Technology was, starting to actually become mature. You could build powerful applications that worked on devices that delivered rich media, high quality software experiences. Bandwidth was big enough, and it was right at the front end of an expansion of the internet and of the utility of the internet. And we never look back, right? It's just been a constant improvement. There may be some periods where it's slower or faster. There's disruptions along the way, like now we have the AI disruption, but fundamentally, it was a strong positive force, and I think we're close to that with crypto. We're not quite there, and there are a lot of things lining up. The legal certainty from laws coming into force around the world is very powerful. The kind of improvements in blockchain infrastructure in terms of scalability, cost efficiency, usability, the ability to build much more simple user experiences for dApps, for transactions, for onboarding, and the growth of global liquidity. All of those things together are kind of lining up, and so I'm actually quite optimistic about this. I had a long post on X about my optimism a couple months ago, but I'm quite optimistic when I look in terms of the overall history and where we are. And I don't think it's just one thing. It's not, the ETFs have liquidity and therefore, this is
Hmm.
here. All these things kind of work together, and so I'm certainly seeing that. And really now the focus appropriately in our industry is on not just real world assets, but real world applications, right? The kind of as we say, the rubber meets the road. We're now at a point where people can deliver good customer experiences. People can deliver on this in a compliant way as well. And so, just like in 2002, the internet applications weren't so good. 2003, the technology started to get better, but then 2004, everything came together, and you started to see a lot of high quality things start to happen. YouTube, Facebook, like a lot of things were born in that period, and sort of saw a real revolution in the adoption of the internet. And so we're very close. I think 2025 is going to be like 2004 for our industry.
Mark your words. Yeah, maybe as a metaphor, it's like when you do a puzzle and, first there are pieces everywhere and little by little, at some point you actually can see the whole picture, even if some of the pieces are still missing, but there is enough so that the whole picture makes sense, maybe.
Yeah, for sure.
I would like now, Jeremy, to talk about stablecoin issuers because we have more and more stablecoin issuers on the market. What's your opinion about that?
Well, first of all, I mean, just in general, having clear regulation creates an open competitive marketplace, right? Until you have that, like major companies, startups, others don't know where they stand and how to operate. So I think it's very good news, because I believe that this is a hugely important and innovative area in finance and technology, and so I think it's very good news. We as a company, we want to see more stablecoins being issued around the world. We believe very strongly in this form of money. We believe very strongly in sort of the on-chain economy and what that can be. And as a company, we're not going to issue stablecoins for every currency in the world, right? There are hundreds of currencies, and I do believe there'll be powerful on-chain pesos, and there'll be powerful on-chain yen and Aussie dollars, and all these different currencies around the world. And if they're done with clear equivalent legal and technical structures, that will create this internet financial system. Circle specifically, though, we're very focused on dollars and euro. And we believe the dollar will be the most important currency on the internet for a long time. And so we're very focused on making sure that we have the best digital dollar, the best technology, the best compliance, the best ecosystem capabilities, like all of this. So we're very focused on that. And we believe that digital euro is also going to be very significant. And I think now that we have laws, the utility of these digital currency euros can be applied domestically as well. And we can start to move outside of just crypto trading, and we can start to see this used for the benefits that programmable money brings. And so we're quite excited about the possibilities for Euro stablecoin. Since launching under MiCA and issuing out of Circle France, like we've had some nice growth in EURC, and we're bringing a lot of the capabilities that we have brought with USDC, the technology capabilities, the ecosystem we have that's broad. We're partnering with a ton of companies in wallets, custodians, market makers, exchanges, the whole ecosystem we're partnering with on EURC. I'm going to be coming over to Europe in September, doing a roadshow. I'll be in Paris and a few other cities, so hopefully we'll see you there. And as we go there, like I think you'll see a lot of announcements of companies that are like launching products and capabilities using EURC as well. So we believe we've got a good product. It's got great liquidity. You can create and redeem it one for one through exchanges like Coinbase and use it on chain in a very simple way. You can use it with basically free transactions on some blockchains now, and it's a multi-chain asset. So we feel very good about that product in Europe. And we think we're at the start of what will be a continual growth cycle for that in the coming years as well.
And it seems now that most of stablecoin issuers are focused on USD. And do you think it could lead to liquidity issues due to the increasing number of trading pairs, because you have a BTC USDC, BTC USDT, BTC USD0, etc., etc.?
I mean, the conceptual model that we use for stablecoins in general and USDC specifically is we think of it as an internet utility. It's a public protocol and it's an internet utility. That internet utility is available to software developers who connect to the protocol and build applications that support it, and end users, of course, who use that through all of those different products. And so it is a kind of platform and network utility. And the kind of platform-based model and the network utility-based model has very strong network effects to it. The more developers that build apps that implement it, the more utility that the network has, which then drives more usage. The more people who hold it, the more utility it has. So you have a kind of Metcalfe's law, as it's known, the sort of more nodes on the network, the more valuable the network becomes. And so you have I believe, USDC has very strong network effects. And so for whether it's a DeFi protocol or an exchange or just an end user wallet that has to decide like which stablecoin, which dollar stablecoin am I going to support and use, they're not going to choose 5. They're not going to have a bunch. Now, maybe someone will come and bribe them and say, I'll pay you a whole bunch of money to promote this for some period of time, but that's just burning cash. It doesn't necessarily lead to like the network effects. And so we're focused on doing the things that continue to grow the value and utility of the network, both at a technology level, at an ecosystem level, and that's how I think we'll compete. And so I guess that's a long answer. Maybe the short answer is I don't think that there's going to be room for a lot of dollar stablecoins in the market. I think it's going to be a market of a few. Now, there will be a lot of products and there'll be niche products and other things, but I don't think this is a market with a huge number of stablecoins. Again, there may be like market specific peculiarities. It may be that in one country, the regulator bans foreign stablecoins, or there are lots of different ways that this could happen because government is involved. But I think that's sort of at a high level how we think about it.
I totally agree, and I agree that there's no room for thousands of stablecoin issuers for USD, for instance.
Yeah.
And speaking about that, do you see like decentralized stablecoins issuers that redistribute a portion of the yield to their holders as a threat? I mean, for instance, Eura from Angle, USD0 from Usual.
Yeah, I think like there's definitely a distinction between sort of legal cash, legal digital cash, and its use, and how people will think about that, how people think about that from a risk perspective and a utility perspective, and then investment products. So people will choose investment products when they want to make some extra money, if they don't need to use their money as much. And there's lots of ways. There's lots of investment products, obviously. So some of these sort of yield-bearing stablecoins are essentially their investment products, and they're designed a lot like other investment products. And probably regulation will treat them that way over time, as we go. Maybe not right now. It's like it hurts people's heads, and so they decide not to work on it. But I think we definitely see that growth, and I think there are going to be good regulated on-chain yield-bearing investment products that are similar to government bond funds that you can purchase from your brokerage account, right? And that work on chain. And we believe there'll be a strong relationship between digital cash instruments like USDC and ERC and these investment products. Just like the cash that you have in your bank account, you can move that cash into a brokerage and then purchase securities and then hold those things that hopefully will either grow because the company grows or because someone's paying you a coupon on a bond. So I think there are lots of these out there. I think some of them, right, we have to kind of look at them for what they are. Some of them are essentially like hedge funds that are operating on chain with a particular trading strategy, right? Something like USDE is really like, it's essentially a particular trading strategy, and you're just depositing money and assets into that trading strategy. And as long as Ethereum is sort of strong and growing, like that should be a marginally better outcome than a government bond or something. Mainstream at scale, like I think the more that real world assets can come on chain, and the more that the kind of clearing and settlement of the purchase and sale of those real world assets can come on chain, the better. That's just part of building the internet financial system. And I believe that stablecoins will be like well-regulated payment stablecoins, like what we're seeing with e-money tokens in Europe or payment stablecoins in the US under these laws. I think those are going to be very, very popular for how people interact with those kinds of products. But we'll still need cash. We'll still need this kind of electronic cash. And I look at the total addressable market for electronic money, legal electronic money. It's like $100 trillion globally. And part of that is maybe about 10% of that is in these kinds of investment money market type of products that are short-term, low risk, yield bearing. And the vast majority of it is commercial bank money, privately issued commercial bank money. And on the whole, like stablecoins are competing in that pie. So we have a long way to go.
Yeah, interesting. So yeah, you see them as a complementary products.
Mm-hmm.
Well, Jeremy, we're coming to the end of this interview, and our DNA with Crypto Coulisses and Crypto Backstage is really to look at your entrepreneurial journey. If I think probably your role from 10 years ago to today to in 10 years will be different. How do you see this as the co-founder and CEO of Circle?
Yeah, it's really interesting. I mean, there's been all this talk on Twitter around founder mode. I don't know if you've picked up on the meme that came from Brian Chesky's interview with Ron Conway. But so I'm thinking a lot about like, what does it mean to be a founder at all stages, right? So as I have been a founder in 3 companies, but in Circle 11 years ago, the role is very intense, right? You literally are involved in everything, and that changes over time. But even today, as the CEO of a company with near 1,000 employees, I'm not involved in everything, but I still stay really close to everything that's happening, right? I want to be able to understand very, very deeply everything that we're working on, and collaborate at every level of the organization, from engineers to people working on policy issues or whatever it is. Yeah.
How does that help you and the company being still hands-on versus being an evangelist, for instance?
Yeah. So I think there's a role that I play that only I can play, which is, I kind of carry the spiritual torch for the company, and I sort of have the greatest amount of synthesis of information of anyone, and that is part of my role. To be the CEO, to be the founder and CEO, is to have the greatest synthesis, so that I have the best and deepest understanding, so I can help the company choose directions, make the strategic decisions, and then keep that aligned against that long-term vision as well. And so, that's all tied together in my mind. And I think the changes, though, are as we get larger, and as we have more resources, and as the technology and the things that we're working on become more mainstream and more widely adopted, it does create space for me. It does create room for me to have bigger thoughts, or to think about significant new areas, or there may be areas that I believe are going to be massively important in the future, but we can't work on them now. But as we scale, then those are things that are almost like I'm taking on like a new startup in the company, or sort of trying to get a major new thing growing, and that's fun, right? So I look forward to that kind of expansion as well. I think the goal ultimately, we're trying to build a long-term institution. We're trying to build a publicly traded company that can be owned by the public, and I think you want to build an institution that is itself very durable and lasting. And so, that's hopefully in the next 10 years can kind of be at a point where I can say, hey, this is going to be a forever institution. I mean, no institution's forever, but it can be an institution that has that kind of inertia to just keep going. So that's something that I look towards in the next 10 years.
Wonderful. Thank you so much, Jeremy. It's been fantastic having this exchange with you. Maybe could you remind our listeners where they can follow your journey, Circle's journey, and what's the best way?
Sure. Yeah, absolutely. So you can follow me on X, Allaire is my Twitter handle, and Circle is the Twitter handle for the company, and then circle.com is our website. We also have USDC.com, which is increasingly popular as well.
Yes, been launched this year. Yes. Thank you very much. It's been a pleasure, Jeremy.
Thank you, Jeremy.
Thank you, Gary.
Thank you both.